I have an order to sell above this bar. Um, we had a surprise bar down and we held here, didn't get a bull signal. So I think the seller's above there and my stop's up here. My initial trade here, I bought this close. I was waiting for a sell, but this bar accelerated up. So I bought the close and realized that it's really extended and we're breaking out of a final flag, so it's probably going to get down there. And so I quickly just exited that trade. And then I was looking for a second entry sell. We didn't get it. We just collapsed down. And so I think it's very extended and we have a final flag, so we could get down lower. And once we collapsed and then got the doji with tail on top, I thought it was a reasonable scalp. We also have this low, which is a bad sell signal, so we could be going up there to test it. But I do think we'll get a lower high. This was a surprise bar, so I moved my target to break even now. It was a double bottom bull flag, but I thought this reversal down was strong enough that it was okay to sell here and sell higher, with the chance that this would go straight down to a new low. So it didn't. Obviously, we got a breakout bar, but I still think lower high. And just like this bar might get tested because it's a bad sell, we probably have to come back down here because it's a bad buy. I wanted to add my second half up here, but these three bull bars are very strong, so I'll need a second entry to add, and I'm probably going to get stopped out. It was only half size because I wanted to add higher, but with this untested sell signal, I think it wasn't worth selling down here, especially because it's just low in the trading range. Alright, I got stopped out on half size, so $15 loss. So down 15.30 now. We got above the low of this sell signal. I still think we're going to get to the high of this buy signal, but I didn't want to stay in after this high, so I'll wait to sell a reversal down if we get a good one. If not, then I'll miss it. I don't know, like, I know always in hindsight it's easy to say that it's dumb and I shouldn't have done it because it didn't work out. So I don't know. Like, I know I'm selling with a limit order, low in a trading range, a double bottom bull flag, so it's too low to sell. But I thought if I sold and was willing to sell higher, that it's reasonable. And I thought we'd get a lower high. So maybe it's because this was so strongly up that I need to wait for a test up here and then sell a lower high instead of selling down here at all. I guess the frustrating part is I know the answer about why I shouldn't sell it, but there's so many times when it is reasonable to do that, and I guess I just need to get better at realizing when it's reasonable and when it's not. Because sometimes it'll do this, final flag, try to get a breakout, strong reversal down, probably the high, and then I'll wait for a stop entry and it'll just collapse. Like, it'll go above the high of the prior bar, and then collapse. And I think, well, I should have sold that and be willing to sell more higher. Or there'll be many examples where it'll go above this bar, but it'll go up to 50% pullback and then get a second entry sell, and then you can sell here and below this bear bar and then get a swing down. And so when I look at that, I think, okay, next time I can do that. I can either sell here and get the quick flush, or sell here and sell more higher and get a swing. But then when I do it, I get stopped out. So I know the answer at the end of the trade that it's not wise to sell at the low of the trading range. But then the other examples that I'm seeing are showing that it could be warranted. So I guess I just have to get better at that and knowing when not to do it. And that's what kind of muddies the waters a bit, because I look at it after the trade, and I go, okay, I can't take this trade again. I'm never gonna take this trade again. But then I'll see it. I'll stop taking it, and I'll see it work out 10 times, and then I'll say, okay, maybe it is okay to take it, and then I take it, and then I get stopped out. So I have to get better at knowing when to take it, and um, not just saying, like, relegating it to it's a bad setup and not taking it, but understanding when it should be taken and when it shouldn't be taken. I have an order to sell below this bear bar. I wanted to sell below this one because it was second entry, but after the 3 bull bars, I wanted to see a second consecutive bear bar, and we got that here. So 348.73 is the midpoint, so I may take off half there. So 348.74 is the midpoint if you sold this high and sold more below this bear bar. So I'll try to get out half at the midpoint, and I'll leave the other half to see if we get back down to the buy signal. I think it's a reasonable swing sell. I didn't want to sell the first one because of 3 bull bars, but after consecutive bear bars, I thought with a reasonable target down here, I thought it was an okay trade. So 3 pushes and 3 pretty good bear bars, so I don't think I'll exit above the bull bar. I still think we should get down to the midpoint and potentially down to this high. We're holding right above this level and keep bouncing from it. I think if we bounce from here again and don't fill my target, I'll just move my stop to break even and look to sell higher because we just can't seem to break through this level. I got filled on my first entry. My second entry is down here at the high of the buy signal, but if we get a bull bar, I'll exit above it. Okay, I'm gonna exit above the bull bar, just because it's a micro double top, micro double bottom, and a buy signal. I guess I could have maybe exited the full thing down here at the midpoint, but I didn't. I thought we would get down here, and we still might, but might have to pull back first. So I ended up making $9 on it, $7 on it, and I knew that if I had taken the full thing down here, I would have made back the earlier loss, and so I was tempted to take it off just for that reason, because I wanted to end break even, but and make up for that loss. But I thought for this individual trade, I thought this was a reasonable target. There's lower probability than just exiting at the midpoint, which is probably the higher probability trade, much higher probability. But I did think it was a reasonable target to see if we could drift down there without getting a micro double bottom or buying pressure. And we didn't. We got a micro double bottom here at this low. So I exited, but I didn't want to exit the whole position here just because of the prior trade. My premise for this trade was that there was a chance we could get here, and so I wanted to play this one out as an individual trade, not thinking about the last one. And so I think it was a reasonable trade to take, and I think the management was okay. Maybe I could have sold below the bear bar, but after 3 bull bars, I didn't think that was good enough. So I think where I entered was okay, and I think my target was good. I bought above the second consecutive bull bar, and I was willing to buy more below it, thinking double bottom bull flag might get a breakout above the high. I don't want to make the mistake of buying. I mean, all my buys are up here for the most part, and that means they're all high in a trading range. This one, I thought the context was a bit different, but I'll need to be quick to exit if it doesn't work out because it is high in a range. I decided to just exit there around break even. while I was in the trade, I just thought this is too soon after this last trade for me to actually have a clear sense of, like, to have analyzed everything before it. So um, I thought it was a reasonable opportunity, but there's also going to be other opportunities. So I just thought I haven't really looked properly at everything to confirm that this is something I should be doing. It's best not to just not be in it, and maybe take a small break after this last trade and try to evaluate what I should be doing. I think I lost like 30 cents or 40 cents on that, so still down 870.